So hi guys and welcome to this week's technical masterclass. For the new ones that just joined on this session, well basically this is a weekly market outlook which we do it for free. So everyone can feel free and welcome to join in order to gather some knowledge as well as see the way we trade and our weekly bias for the Forex markets. Before jumping on the price charts, I would like to have a look at some of the events taking place this week in order to have a clear understanding of price movements, and then we can have a quick rundown of what happened during last week in the forex markets, and then diving deeper into the charts to see whether or not there are any setups on offer this week. So let's start by going to Forex Factory, where we get to see the calendar of the week. So starting with Monday, we have bank holidays on Monday for the USD and CHF, whereas the volatility won't be present in the markets due to these small break. And then on Tuesday we have the PMI for both GBP and the USD. Meanwhile, the CPI on the CAD. So it's going to be an interesting day starting the week. Let's say on Tuesday, where I would expect more volatility and price movements. And then on Wednesday, we have the Reserve Bank of New Zealand, which will announce its decision on interest rates. Some economists suggest that it will be raised borrowing cost by 50 basis points to 4.75%. However, some other market analysts forecast a 0.25 lift following recent flat inflation and employment figures for the fourth quarter of 2022. So it's going to be interesting day as well. And later on we have the FOMC meeting minutes, which is going to rebalance the intraday price range. Then on Thursday, not lots of things going on. Basically, continuation markets. The JPY is going to have a bank holiday as well. And on Friday, a continuation market as well. Let's take a look on the DXY, where last week we had a bullish bias when it comes to the intraday price range. So starting with Monday, we saw price breaking the previous day high, knowing that on a bullish markets, once this happens, it means that well, we might be ready to expand to the upside by creating another higher high. However, knowing that lots of price inefficiencies could be found down here, we saw price on Tuesday coming during the news release, taking out these low as a sell side liquidity while filling just some of this liquidity void, and then continuing to the upside in order to form the next bullish leg. Then when it comes to our premium sessions for the premium members of the MarketNerd, on Thursday we had a meeting where we talked about this price action, basically, where price was kind of creating a trend line liquidity. A trend line for us is basically money, is liquidity, is something that has to be manipulated. So basically, if everyone is trying to buy here, price has to trade below this line. So all these buyers turns into sellers, and once that happens, price continues again to the upside. So we talked about the importance of this price range when it comes to time and price, when it comes to the length of these market legs, etc., etc. So basically we talked how important it was for the price to take out this trendline liquidity, meanwhile not violating these levels right here. So basically everything had to happen inside of these working hours, and then continuation for the next day. Otherwise, this was gonna crash instead all the way to the downside. And that's basically what happened. So price took out this trendline liquidity, filled this area on the left right here, and then once mitigated here, we saw the effect it had by trading to the upside, and on the next day market open, price gapped to the upside by trading even higher. So once it reached that high level, we saw price declining. So the question is why? Well, basically, if we look at the daily time frame from another perspective, we know that right here we're entering the premium level of the recent range, price range, bearish one. And that's where actually lots of sellers will jump on the market. But knowing that from the intraday perspective, price is still kind of bullish, we don't want to be the ones that want to sell first unless we have more confirmations even on the other time frames. For example, taking into consideration that we are trading now at this key level where we expect price to decline lower during this week, we know that this range, first of all, is quite a huge one, meaning that can the price trade again to the upside, let's say tomorrow? Definitely yes. Can it trade to the downside? Definitely yes. So how do we know, or how can we know if price will trade to the upside or to the downside? Well, basically everything depends on the market open, and second of all, how the Friday closed. So when a Friday closes to the downside, and why I say to the downside, well, basically let's say that price was bullish during the day and then closed bearish right here. On Monday there is, let's say, a 98% probability that price will violate the previous day low price level. So basically Monday open right here will trade below this line unless we see price gapping to the upside. So taking into consideration that the USD is going to have a bank holiday on Monday, we might see price breaking to the downside on Monday. Knowing that a bank holiday doesn't mean that the dollar will fall, but the volatility will be less price movements, etc. I don't consider that, let's say, the market will crash all the way to the downside, but we might see a consolidation or slow price movements, leading to Tuesday creating the high price level of the week. So if that's the case, if we manage to see the price trading below these levels on Monday, right here, so breaking these 103.85, so trading around 103.60. On Tuesday, we expect a pullback into these levels and continuation to the downside. So this is the first scenario. The second scenario could be if price gaps up. So the same thing as it happened on Friday. We might see something on Monday, knowing that during holidays the gaps can be wider than during the weekdays. So let's say that the market opens somewhere here, I don't know. Then on Monday we might see price just trying to fill this gap, and Tuesday continuation to the upside, Wednesday continuation, and probably Thursday retracing to the downside. Why? Because okay, we're trading at a key level, but not forgetting the price is still bullish. So however the bias is, however how much we want to trade to the downside, knowing that price should retrace now, we still have to be realistic while looking at the market from a bullish side. Well, basically everything is bullish, and we love that. We love that because if we think that everything is bullish, it means that everyone is expecting that to be bullish, and that is why it's going to be bearish. So always should be thinking on the contrary side. That's basically how the market makers manipulate the markets on a daily basis, always doing the opposite thing. So when the hype is high, just go against it. So knowing this, we have, let's say that as a Forex analyst, when we analyze, we always start by, let's say that, okay, the market has lots of candles, it's a mess here, you know, lots of informations. You go on YouTube, you hear 10,000 guys talking about different things. Someone is saying bullish, bearish, and then you see fundamentals, you see news reports, whatever. You are here inside of this mess, you know. And then you start to think, okay, how much guys are buying? Let's say that 80% of these guys are buying, and then 20% are selling. Now, the higher the number of the majority, the more liquidity presents, meaning that all these guys should work for these guys. So basically, when everyone is buying, the banks want to sell. Why? Because everyone is buying. It's the same thing as it works with inflation or whatever. So let's say that, okay, you want to stick with these guys right here. You want to do the opposite. And then you know that's based on the way you've been learned to analyze. You have worked inside of this frame, still looking that the market is still bullish, but you know that it has to be bearish. And here is when it comes to, first of all, knowing what concepts are you using, are you applying them, are you being patient, etc., etc. So once you have identified all the things that you need to trade, let's say, it comes to framing down. So what does it mean? Well, if you know that, okay, is going to be bearish, then you know that, okay, the week has 5 days, right? So you have to know, is it going to be bearish during the first 2 days of the week, during the middle of the week, or the end of the week? How to find this? Well, same thing. Where is this money being created? Where did, let's say, the market close on Friday? Or let's say the previous week, what did the market do on Monday, Tuesday, Wednesday, Friday? Just build up your frame. Get this information and you will know. Because the market won't be the same. Never, never, never. You will always have different scenarios. For example, right here. A few weeks ago, this was something that we were analyzing for our premium members. So basically we had these guys here buying, so we knew that this is money for us. The market has to manipulate this. However, knowing that the market is falling, these guys won't be a problem. But who is the problem here? Well, these other guys right here. Why? Because they are selling. This is a well-known resistance level, right? So these buyers are against, let's say, the order flow, which is bearish. These other one have been smarter, trying to follow, but still they have to be taken out. And then we know that, okay, the market has a maximum potential of, let's say, reaching to higher prices, not more than this area. But from the other side, we know that this low, this week right here, it's the previous month imbalanced level. So basically, because I know that not all of you would understand this, and it's totally fine, this is a very key level for the banks, a very key one. And this is where we as traders, me, for example, I want to see price here, but I'm not the market maker, right? I just know how to read the price action. So I have two informations here, for example. I know the maximum potential and I know the main key level. So once I see price taking out these guys on a very bullish day, and you can see the candle, that's the true intention of the market makers was simply to manipulate, were not to shift the market. And I mean, from all these sellers here, find me a better candles than these two bullish ones here. And who is sponsoring this? Well, the market makers. Why? Because everyone is selling. And here Even though I haven't marked, I can spot lots of trendline liquidities and other zones like support, resistance, patterns, head and shoulders, whatever retail thing that you can easily learn on YouTube, which has been played out in order to make everyone go short and then manipulate some guys. Continuation to the downside. So here, for example, we had another scenario. But right here, we have a different one. Why? Because, well, since starting from here, for example, we had price accumulating or basically consolidating down here and up here. So money area, money area. The market is bearish. Okay. We know that the market has to reach for these sellers. Before doing that, takes out the buyers and then goes to reach for the sellers. But the question is, who sponsored this level? Why here? The educated traders of the market nerds, meaning our students or even premium members, knows that this level is a very important one and basically works as an open gate which fuels the markets to, let's say, sometime reverse or pull back to the other side. So basically, if the market was bearish for a couple of days, weeks, hours, whatever the time frame is, this level have the power to create some kind of correction. So knowing this, and that was a monthly level, meaning that the higher the time frame, the more volatility or the more price movements is going to cause, right? So knowing this, we see the markets trading in a very bullish, aggressive way. The uninformed trader now would be thinking, okay, what is going on? Why? What's what did the price see here for doing this, etc., etc. Meanwhile, now everyone thinks that okay, the bearish market is over, is bullish, etc. They're trying to buy here. So basically, all these other days are simply traders, investors, adding money in the markets, trying to follow the hype. And you see that 1, 2, 3, 4, 5, 6 days, 7 days here in total, starting with this Monday, and we have the next Tuesday. So from this Monday to the next Monday, price had basically been just trading up and down, like a roller coaster, right? And then Tuesday next week, price manipulates everyone, all these buyers right here. And after manipulating them, making them think that, okay, now he's going to the downside, does the opposite. So now enters to the same level that recently on January moved from. So these levels right here were the same levels that price on January made that's, let's say, manipulation. So we know that, okay, now this is a serious level because the same guys, the same banks, institutions that once wanted to manipulate and continue to the downside, the same will be here. But how do we know if their intention, for example, it's now to sell on the same level or to reach this level that they couldn't the last time? Well, that's where we go into intraday timeframes, small ones. For example, right now we have the bias, as we said earlier, but we have to accept the market's condition. So when we see that the market condition it's still bullish, but at least we have some more information. For example, we know that Friday has been closing bearish, and it's the same thing as let me find one. For example, this one here, Monday opens bullish, closes bearish, meaning that Tuesday has a very great probability to break the previous day low. Why? Because it's basically very near. So that's what happens. And then continuation to the upside. So right here, it was a different scenario. Why? Because, well, we talked about it. It was a consolidation, traders buying, selling, manipulating everyone. But right here, if we would have a break of previous day low, it would be an important sign in order to go bearish. Right here, it was not basically. Why? Because we knew that even if it does that, well, lots of areas, imbalances, gaps, let's say, that has to be filled and then reverse into the upside. So this is kind of a tricky thing. Why? Because on the same way as price had been, let's say, accumulating these kind of days between these highs and lows, a previous day, one day earlier, broke the previous day high, on the next day broke the previous day low. So in this kind of situation, we would be waiting for the third day in order to have some more clarity. However, just to simplify this, if Monday trades to the downside, as I said earlier, or let's say consolidates, we expect Tuesday high to be formed somewhere here. Otherwise, if price continues to trade to the upside or it gaps up to the upside, whatever, we know that the maximum high level that price could reach for, it would be this price inefficiencies up here. So basically, this would be our area where we would jump into shorts, meaning that's not favoring the USD, so basically favoring the other currencies. And then we can jump into some other very interesting trade ideas for the week. One of them, EuroCAD, where we have actually been waiting for a couple of days now. Started to be a bit tired with it. But if we look on daily time frame, we see price having liquidity on both sides, but on different price projections. So basically, let's say that for this week, if price really wants to take out, or to simplify this, to trade lower than this level for some reasons, it has to do that on Monday, maximum Tuesday. So we have to see the decline to the downside. Otherwise, let's say that price breaks to the upside, then we know that the end of February will find price trading to these levels up here, because it has to trade above this level known as resistance 1. So while having this information, for the traders now that knows what I'm talking about, I'm expecting the Monday to create the high of trading day at these levels right here. It's kind of, let's say, you can classify it as the end of, well, the 50% of this key level, this bullish candle, or the maximum of the price inefficiency that could be filled. And at the same time, we saw Friday closing, leaving behind equal highs, which has to definitely take out. So yeah, that's basically what I think. I had a short position, as you all know, on Friday, a scalp trade for the day, 1 to 8. And then when it comes to the swing trades, I'm very interested to jump into these shorts. So it has to be Monday, a maximum potential Tuesday. So now, knowing that, because we had the CAD, if I'm correctly, CAD CPI on Tuesday. That's why Monday, Tuesday maximum are going to be crucial in order to decide about this range. So now, when it comes to the structure, it's not, let's say, from a structure perspective, it's not my, let's say, level which I like to go short based on the structure. Why? Well, it's the equilibrium of a price range. So if I would say that this is the high and this is the low, I always like to sell here. I don't like to sell here. But as I said earlier, the markets won't be the same. Why? Well, for different reasons. So that's why we have to read and we have to understand the situation. For example, I would never sell at this level knowing that above me I see this resistance level. Well, some of you would say you're a stupid one because this is a support resistance. Well, I see it as a money. So it's just different perspective. I see this area as an area which would be manipulated as soon as price reaches that area now, because in the past was an unknown level, still unknown level, and then here confirmed during these days. So imagine the orders that will be jumped added to the market once price reaches this line right here. Lots of sellers, and that's why price will collect all their stop loss levels above here somewhere. So knowing that I wouldn't sell there, I can only agree to sell on this level if my bias is still bullish. So let's say that if I would be looking to sell as from a bearish perspective, because I'm a seller on the long run, I wouldn't sell here. But if I have to know that, okay, the reason for considering this low is just as the last possibility for takeout of this money, fill this area, and then continue to the upside, well, that's another story. Why? Because then I know that from a monthly perspective, if I just delete everything now, here is where we are, right? So basically, we're trading inside of the same regions as the previous month. So now we know that we're bullish, right? So it's 19 of February, tomorrow 20. 2 weeks left. The probability is what? To have a bearish week and then a bullish week, or to have a bullish week and then a bearish week. Well, 50-50, right? 50-50 because it's just the last 2 weeks. So when it is 50-50, we do the same thing. Okay, what is happening these days, for example? Okay, the previous week was a bullish one, meaning that buyers leaving liquidity behind. So from this point of view, for example, we get the understanding that okay, we're more favoring a bearish week this coming week and a bullish week the next one, which would lead to a lower price level reaching for this, let's say this box right here, this small box right here. And this is the last chance that this market has before reaching to higher prices. So having this information, I have to deal with who is going to sponsor this, and I find myself trading in the middle of this zone, which in another market conditions wouldn't be a level that's I would agree on getting into, let's say, short position or longs, whatever. But knowing the market that I'm trading, knowing the reason why the market has to do such thing, etc., etc., that's why sometimes it's not always about what the structure is telling you, rather than what the liquidity is telling you, what the market is telling you. And it's not, it looks like it's complicated. Well, actually, it's not. It's more complicated when you think that, okay, I learned something that moves the market and that's the one. No, that's complicated. But when you simply put the logic behind, when you simply think as if you were a market maker, which is looking at this screen, identifying where the money is, where are everyone buying or selling, let's say, how is the structure looking, and you take just a piece of paper and you start to write down, okay, money is here, what day of the week am I trading? This day. What week of the month am I trading? This day. How did the previous week go? How did the previous months go? I mean, all these things in the first view looks easy, and you're probably thinking now, why have I not, why I didn't think about this before, right? So why I haven't tried this before? It's pretty simple, just taking some statistics. Well, do it because it's gonna save you a lot. So you don't need to wake up every day in the morning and be like, oh, what is the market doing today? Is everyone buying? I want to buy too. No, that's the wrong attitude. You have always to be prepared and build your, let's say, markets on the weekends. So during the weekdays, you can do like, the educated traders do. Just jump in the market, 5 minutes, 10 minutes, see, do you have anything to do? Okay, nothing, get out, go on vacations, go on gym, do something, stay with your family, or maybe even work with some other thing. Nothing stops you. Instead of being on chart 5 hours, 10 hours, and not understanding what the market is doing. And I don't care if some of you is making money staying 10 hours a day in a chart and making money randomly. Because, okay, you're making money now, but you're gonna waste this money in the next week, in the next month, or probably in a few minutes, you know? But once you know where the market is moving, then I wouldn't be afraid. Why? Because I know that, okay, this type of trader, for example, just taking an example now, is buying somewhere here, having his stop loss right here, aiming for this money. And I know that this guy is a good one. Why? He's a swing trader. He doesn't care about a high reward. He just knows the direction of the market. He's trading based on that. He has a good understanding of liquidity, etc., etc. And then what's the most important thing is knowing when to get out. For example, let's say that he was pretending to take the profit somewhere here, and he see that the market is declining now. The next day fails to reach or to create a higher high, and then coming back to enter one more time, closing at break even. Why? Because he knows that my entry now, it's seen as equal lows, and what equal lows present is liquidity. And it doesn't matter that this level is a key one. And if some of you would wonder why a key one, well, you look all these sells, who would sell so hard in order to buy again, rather than institutions. So now they do the same thing. They go there once again before buying again. And why they do this? Well, these shorts, if we use a stop loss level, they don't, right? So these shorts are in loss, right? So that's why they have to close these positions. They have to mitigate their orders. So once they mitigate their orders, aim for this liquidity. For some reasons, they decide not to go to the upside. They warn everyone the next day. Now, the educated trader knows that I'm a target. If I stay on this market, I'm a target. So once this happens, let's say this week is done. Okay, this trader, what he has to do is trying to find out what happened from another perspective. Well, he was, let's say, kind of busy working on the 4-hour time frame or 1 hour intraday mess, and that's why I call it intraday mess. Lots of information which might confuse you because you see the market Tuesday bullish, bearish, and you're like, okay, what is going on, you know? So let's say that he would go on I don't know, weekly. Yeah, we can say a weekly time frame. Where was that? That was the end of January. So basically right here. So in the end of January, he understands that during the week, the market created a so-known resistance level, which could be seen from 2 days trading near the same highs. But from a weekly perspective, this support or resistance level was created and could be seen as a single candle. Meaning that, yes, these intraday guys who would short that positions would be benefiting from this. But the question is, where is their stop loss? Well, some random stop loss levels, right? Someone right here, would he be profiting a lot? Well, nope. Someone right here, someone right there. It doesn't matter. It doesn't matter because at some point, everyone sometime has to win. It's like when you gamble, you know, you go and play some poker or whatever. Sometime you gotta win. Why? Because it gotta keep you connected to the game, right? And why they do this? Why they build these kind of things? Because in the end of the day, I don't move the market, you don't move the market, the banks move the market, right? We can only benefit by knowing how to follow them and not being part of the manipulation. So basically, you have to think out of the metrics in all the ways, not only in Forex. And I mean, use your logic now. Which is the most important thing for them? Which is going to generate more liquidity? A support or resistance level, which could be seen from the intraday traders. So basically Monday high, Tuesday high, Wednesday high, for example. I'm just taking an example. Or the same scenario, but on a weekly time frame. Of course, it's on a weekly time frame. Why? Because now they have, when the price comes back to this level and in the future, they will have to deal not only with intraday traders, the ones that places a trade today and exits maximum tomorrow, but with swing traders, the ones that would jump right here and place their stop losses up here, up here, up here, wherever they see it as a safe place, let's say. So that's why sometime I know that it's like terrible to see it when we see that, okay, why did this work? Why did this work out? Why it was not taken out, etc. But trust me, it's more important the long run than the short term. So as a trader, what we should do in this, let's say, level, it's reacting. Reacting why? Because we know that the entry, for example, right here, is now a liquidity. So we rely on the next price movements on this day. We see the bearish market retracing. Yes, we know that it has to retrace because it left behind some areas open, which has to be filled. The next day has to create a higher high. We see the failure high. This is a warning. Could this be a partial profit? Definitely. Because, I mean, why to stay out of the trades where you had, let's say, a 1 to 5 risk to reward? Now you're having basically, let's say, a 1 to 4 right here somewhere. So you could potentially see the high of the day being formed during the London session right here at 1 o'clock, and then getting some partials, knowing that it could retrace. Let's say that you didn't know, doesn't matter. You see price breaking the previous day low. I mean, you could have spotted that since the Asian session. So since here you had the warning. But let's say that you refuse to believe that, or you simply didn't pay attention, and you see price breaking again at the same level low right here, taking partials. Why? Because you know that, okay, the next money level is right here. And you see how price tends to behave once it comes to this level. So you see that once it comes to this level, you see a bullish candle. What are these guys doing? Well, buying. Because they simply identify a support level. So yes, can it work out? Definitely. How much? Well, that's another story. That's like 1 to out of 20. So basically, lose 20 times, win 1 time. Well, that's not something that you can rely on the long run. Look at gold USD. I will definitely do that. So you want to know the long run? The long run, bullish all the way to probably the moon somewhere here. But I'm not jumping into that right now. Instead, telling you the probabilities. So as you see, right now we might be in conditions where price has already been creating the low of this month and potentially shifting to the upside starting by Monday. So the first thing that we would like to see is a takeout of this price level, which I would identify it as the previous day high or breakout structure, whatever. And somewhere here, I think on the 30-minute, 2015, nope, let me see. Yes. And this would be the entry level for Monday. If the 4-hour confirms that, yes. So yeah, we need to see a break of this high, and it would be even greater if we see a body close on the 4-hour closing above this level right here, and then continuation to the downside, creating the low of the day, break of structure on the lower time frames, continuation to the upside. The first partials, knowing that the market has to retrace for a couple of hours or days, whatever, will be this level. The final targets would be above these highs. So as I said, I'm not getting into major currencies because they are all connected to the DXY. So remember what I talked about DXY, and same thing applies on all the other major pairs or commodities, cryptos, etc. It's the same thing as, for example, Euro USD, which we were bearish last week, and we know that price on Friday refused to enter our long entry zone that we have been waiting for many days now. This used to be a short entry zone in the past. It's not anymore because the markets, it should turn bullish now. So knowing that it refused to trade lower, we know that the probabilities now to reach for these levels, even though it was just a few pips away from it, 10 pips, are lower than before, where everyone was selling and no one knew that starting from this level everything might shift. So being in this condition, we know that the only way where we would give up of waiting for price to reach for these levels would be if we have a break of previous day high, a break of structure, a break of range of the on the 4-hour time frame of this high, for example, and a small pullback into these levels before continuing to the upside. So these would be the ones. So something like this, and then continuation to the upside. Otherwise, as explained on the DXY, let's say that the market is still favoring the DXY on Monday, Euro USD, you see price gapping somewhere here. You know that it's going to be a continuation until late Tuesday, Wednesday. So, EuroCAD, as we talked, Euro AUD is kind of having the same vibe as EuroCAD. Lots of liquidities on the downside. Price recently, right here, failed to create a lower low. However, knowing that we had to retest this previous high in order to see if we could still have that bearish momentum. We now see price, even though we didn't have a clean reference rather than just a previous high, we see price showing some, declining, let's say. So I would like to gather some more confirmations in the coming days. Potentially, let's say Tuesday, I would have a better solution when it comes to the entry zone. Otherwise, I mean, when looking on this price action from this daily time frame, I would simply say, yeah, just short it on Monday, place your stop loss somewhere here, keep it as a swing trade. But knowing that we have to think about intraday traders as well. We gotta be looking at some tight ranges and smaller ones. Otherwise, if you are really a swing trader, well, starting with this zone as soon as it fills, taking into consideration all the possible scenarios, it would never reach above this high and targeting all the way to the downside of 124. But yeah, it can take a couple of days. So there's a difference between being a swing trader. In the end of the day, because that's funny with some guys, which writes to me that why can't I be profitable, blah blah blah, and I tell them, okay, are you a swing trader? No, I'm an intraday, I'm a scalp trader, etc. I want to be millionaire quick. I mean, let's say that you're a scalp trader. Let's say that randomly you won a challenge, whatever that is, or randomly you just found some money, investing money of someone else, etc. You have the money, right? So why do you want to be a scalp trader when you see that you're not that type of guy? Or why do you want to be an intraday when you see that you're not that type of guy? Be a swing trader. If you think that, okay, I am being more profitable when it comes to accuracy, etc., 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 and being swing, at least you know that yes, you won't have the money now, you won't be the millionaire now, because you will be compounding your account, right? But you know that in the end of the year, if your goal has been, for example, 20% or 50% account growth, you will reach that. Otherwise, as a scalp trader, you might hit even 20% up on a single day. But how much secure are you that you won't lose that tomorrow? Because a scalp trader, generally, it's an impulsive trader, which means that he might just react based on what the market is showing now rather than following the bias of the higher time frames. So that takes lots of experience because it's very, I mean, it can be very easy to jump into an entry, but very difficult to get out, to understand when this trade is not valid anymore, so I should close it immediately. And of course, you don't have time to think twice about it because everything moves so fast. And I mean, you can be in a situation when someone enters your room and you're just like, get the fuck out because I have to close the trade. And this has happened to all of us. Why? Because it's scalp, it's everything very fast. So instead, swing trading. Why not? When you know that, okay, this is the money, this is that, etc. Can it reach to this level? Yes. Why? Because, well, failed to create a lower low right here. So we have a problem when it comes to structure, etc. But above this high, shouldn't. Why? Because the money is here. Why would they need to just simply break structures when the money is here? Simple logic. And then, look at the general perspective. Fundamentals. When you know that, okay, I'm a swing trader, I will need fundamentals just once a month to know how is the Eurozone performing, how is the AUD performing, and you know that, okay, AUD is having an economic growth because of China, etc., reopening after the COVID lockdowns, etc., and then you see the Eurozone facing difficulties, etc. That's the bias. Then all you need is just finding an entry. It's more simple than it looks. It's just we as traders that always wants to complicate the thing. And that's why it's always good to plan it out rather than just randomly trading. Try to find out the reason why you're doing this or the reason why you're trading. For example, the premium members know very good how much disciplined I've been with Euro JPY since price reached to, we had bias on the long run to jump into shorts when price reaches for this area. And price have been kind of trying to invite us into this market for a couple of times. If you see all these, some would call it continuation to the downside. We call it a consolidation. And I was still telling the members, nope, no time yet. And then we saw failure low. Price came back once again, started again to be bearish. I said, not again. I would never sell until it reaches for this. Why? Because I knew that for as long as these highs remains here, the first time no one knows about it. Okay, it creates a lower low. The second time people start to see this level. Why? Because, well, it refused to break the previous high. It's bearish. Yes, yes. And then it creates a failure low. So from this moment, everyone considers these pullbacks as a new invitation to jump into shorts, because they know that yes, it failed to create a lower low, but it's coming here because it has to take us, etc., etc. I mean, these things that people believe from the YouTube gurus that they hear every day and night. So that's where everyone starts to sell. When everyone starts to sell, the market makers know that okay, now it's time to just fire them up, reach to the level that we sold the last time aggressively. Why? Because we have to close this buying position. So once this buying position is mitigated, everything will be aiming for the downside liquidity. So all these buyers here, the buyers that will be invited in the future right here, because they will see that, okay, we were wrong about the shorts, the market broke to the upside. As soon as it reaches this, uh, it turns into a new support level. And it's funny because I remember the times when I started the trading, when I started the trades, and it used to be a teacher that used to tell me that this is the market, guys, and a new support level is here. Let's say a new resistance is here. When the market breaks the resistance turns into support. So I was like in my beginning, right? I was like, okay, so it's just like an elevator, with floors. Like the first floor, third floor, then it comes to the second floor, it goes to the fifth floor. Crazy guy. But yeah, tried a lot, failed a lot, and that's why sometimes I even suggest to people don't waste time with things that I mean, after a couple of days or months, you will see that they won't work out, and you'll be like, yeah, just a waste of time. Because you know what's the problem with that? It's not the problem that you just wasted time, because okay, the more you learn, the better you are. But you'll face difficulties on the, uh, let's say, your psychology. Why? Because, well, the reason for, I mean, learning the wrong stuff, it's the main reason why lots of traders has been quitting. Because I mean, it becomes difficult when you have tried to win. You lose money, you lose money, you lose money. Things are not working out, and then you get me telling you that, bro, listen, I'll teach you something good, but are you willing to learn it now after losing so much money? Well, 90% of the people would say nope, because I don't have the will anymore. I'm tired of it. My psychology sucks now. Understand? So that's why it's very important that the first connection, or let's say the first presentation, should be with someone who really knows why the market moves. And I've been having lots of students that have been telling me that, yes, I found you out from this guy, that guy, or simply on Instagram, whatever. I've been studying somewhere, etc. I don't like to mention people. And I be telling them, yes, have you ever asked your mentor why does the market moves? And he'd be like, yeah, bro, head and shoulders, support and resistance. Okay, good. So immediately I know with who I'm dealing. So I don't usually ask people what kind of concepts we apply, etc. I simply ask, why does the market move? Or send me something, analyze from me something. And as soon as I see an analysis, I immediately know with who am I talking with. So I immediately know, is he successful or not? Is he facing difficulties on trading or not? Psychology or not? So I've been in that world before, so that's why uh, I understand everyone and these kind of issues. For as long, because I know as well traders that might have winnings, let's say, even as a retail traders with support, resistance, patterns, whatever. On the long run, it's difficult. Can it be possible? Definitely yes. But I mean, it takes a lot of discipline. It takes a lot of notes, etc. Because I mean, if the market would be so easy, just so you could follow some patterns, everyone could do it. I could teach in the future, even to my 5 years old kids. I will tell him, quit school. You will never go to school. Your dad is gonna teach you some patterns that will make you a millionaire one day. 5 years old. And I will tell him, you see these triangles? Yes. Let the market form these triangles and press this button, and you're gonna win the game. But yeah, if that was the case, it would have been different. So when it comes to the GPs in general, same thing applies to them. From a fundamental based perspective, they're facing problems at the moment. GP CAD, as you see this level that I have marked, I want to see the high of the week to be formed at this level, knowing that we have lots of money underlying right here. So for example, right here, because I see that there are some premium members joining on this session as well. For example, right here, guys, you see that we have a break of previous day high, so everyone would be on a normal market environment, be aiming to jump into buy orders, longs right here. But remember what I said in the beginning of the call. The market won't be the same always. Why? Because, well, down here you have money. So you would basically be part of the liquidity. So does this break of previous day high matters now? Nope, not anymore. So that's why, while knowing that, okay, the market has to go to the downside, but I don't have any key level, for example, we just identify, for me, for example, it's some different concepts that I apply, which I'm not going to mention here because it takes a lot of hours. But they are simply being taught on the MarketNerd Academy by me. I'll make it very simply for you now. Daily candles, okay? High, low, high, low. Where did the previous, let's say, high on the daily time frame? Where was the previous high based on the body candle? Right here. And this is where I want to see the high of, let's say, the next candle that is going to retest this level to be formed. So once I see that this is refusing, I know that that will be represented on the smaller time frames by price inefficiencies, etc., etc. So now I have done just one part of, let's say, my entry confirmations. Why? Because the rest depends on how did the market come at the entry level that I wanted to sell. Because it could come like this, higher highs, higher lows, higher highs, higher lows, or it could come like this, immediately on higher high, showing, let's say, a bullish momentum, a very aggressive one. So I can be naive by thinking that, yes, I'll add short positions and I'll change the momentum of these markets because I'm adding my money here. No, because these guys at the moment are stronger. So I gotta wait for evidence. I don't need to be the first, let's say, seller into the market. So the first thing that I want to see, for example, is knowing that we have no structure here. We just have a previous low and a higher high here. First of all, I would wait for the market on Monday, knowing that, okay, let's take this as the high of the week. Let's take it as granted. Will this low be violated by the same kind of market momentum or not? If that's the case, would I be interested to sell, knowing that the liquidity is just near that? So basically, why would the market makers do this, pull back in order to take this? No. If it comes to this level, they will simply destroy everything below. Which means that I have to frame my work into a lower time frame. For example, a 15-minute time frame. From a 15-minute time frame, where was the last time that price, let's say, kind of pushed to the upside, had some pullbacks, slowed down before continuing to another higher high, this level. Okay, so this would be the level that I would be referring structure that I would refer to as a breakout structure. At the same time, I know that on the 4-hour time frame, it's a liquidity void, which would mean that price could potentially fill this area and generate a new higher high. So here is where I would be looking and guessing, meanwhile writing down my paper, who could cause this. Okay, I would go to the Forex calendar and I would be looking at CAD CPI Tuesday. Yes, we have a manipulation which could potentially do that, which means that the wick of that candle, 4-hour, whatever, might go through to the upside, but the body close still on a daily time frame, close below this low. So this is where me as a trader now frame down two different possibilities, which means that now very simple. I would either let the price break this on the 4-hour time frame, filling this area, using this key level as a potential for long positions, coming into this level, not entering yet, letting the price break another previous low after reaching this, a second mitigation, reinforced order block, as I call it on the academy, continuation to the downside. That's the first scenario. The second scenario would be, okay, it comes to this level, news release destroys everything to the upside, breaking this range high but not getting out of this high, and then the 4-hour body closes inside of the range. So basically we have just a wick to the upside. Let me find a scenario which seems the same. Well, basically like this one here, for example. Or no, we need to have a better one which is kind of the same. A market shift with wick. Okay, here we have it. Right here. This week, for example, on the 4-hour time frame, we see the violation. This is a news release. Thursday, it's 11 o'clock, but the body closed below, which means liquidity grab, but not getting out of the range. If I would tell you that this is the highest major range, not violating it, just closing, taking liquidity. We knew that, okay, money is laying right here. Support level, resistance level, somewhere here. The market makers always, before continuing on the same direction that they want to, for example, in this scenario, are we trading to the downside? Yes, let's burn the sellers. The buyers will be burned automatically. While doing that, they take out, or let's say violates this previous high. Some people would be stuck into thinking that, oh, we're trading a bullish market, so yeah, let's buy. When it comes here, burned out. And you see how aggressively, or let's say, when did the price start to trade aggressively? Once it reached for this level. Why? Because everyone is buying here. Meanwhile, this week just went through creating panic, creating a hype, and then reversing. So the same thing could happen, for example, on the GBP CADs on this scenario, where price trades above this high, but then closes below. So if that's the case, entry on the next 4 hours. As always, the premium members will be having technical session tomorrow. What is tomorrow? Monday, right? So Monday, Tuesday, Wednesday, Thursday, yeah, 4 days in a row where we will of course talk about these scenarios. But you other guys that are not our premium members, just follow these two different scenarios, and yeah, that's all we had basically for today. GBPUSD unfortunately so far didn't come to the desired entry level on Thursday failed to retrace into that level by 40 pips. So let's see how it works out. When it comes to, because I know some of you might be asking, is this an order block? Nope, it's not an order block. Don't sell it, or you might be taken out. But instead, I would consider some shorts after taking out these highs. So yeah, some basically same type of bias so far with GBP-CAD. But GBP-NZD, when it comes to the price projections from a quarterly outlook, remember that we talked about this high and this low earlier, 2 weeks ago, where we said that if this gets violated, we might see the GBP trading all the way to the upside, reaching for this level by the end of May. So that's a good information for us. Otherwise, we will see price refusing to trade above this range high, and then if it breaks a daily structure, and a daily structure, for example, could be referred to as this low right here, continuation to the downside. So we might reconfirm the high of this quarter, January, and a new low to be formed, because so far January has been creating the high of the quarter, and February the second, the low of the quarter. So everything that is happening after that is basically trading inside of the same range. So if I would tell you that, okay, this is the high and this is the low, and now the market has to retrace, you wouldn't be surprised. Okay, what is happening on the intraday perspective? Bullish, bearish, because you know the full picture. Yes, it's gonna be a retracement all the way to the upside. Whatever happens inside of it, it's an opportunity for me as an intraday trader to jump into long positions. For example, right here, money, this level sponsored a higher high. Price retraces where? At this level. Why? Because it has to take money. Takes the money. Entry level, yes. You miss the entry, then let the market breathe. You see the market's taking more liquidity right here, collecting money. Now, after collecting money, why going higher again? Let's retrace. Let's create some panic, right? Okay, so where is the highest probability that the market could retrace? The maximum range low is this area. Otherwise, let's say that we're swing traders. We know that we don't really care about having a perfect entry level. We just want to make money. Even if it's 5% a month, it's still good. I mean, 50%, 60% in the end of the year. And at the moment, for example, we will be profiting 1.4% by risking just 1% in totally chill. Otherwise, as intraday traders, we would be simply missing the entry at the moment because price, well, didn't come to where we wanted to see it trading. Anyway, that was all for today, guys. Hope you really enjoyed. For any question you have, just DM me when it comes to any problem you're facing, concept or whatever. And I mean, you got the support team of the MarketNerd as well, who are always there in order to help you. So take care, trade safe, and see you next weekend.